Hello everyone, welcome to my channel. I have changed my YouTube channel name to NJ Trade Zone. This is for your kind information. Let's get into the video. In previous video, I updated my trade entry in Tata Chemicals based on the breakout candle on 11th May. So this was the pattern, which is a kind of triangle symmetric pattern. So after this breakout, I entered into the trade exactly at around 694. So at this rate, I sold the 680 rupees put option. So after I enter into the trade, the stock has retraced little bit and again continued to move up till 735 rupees. So at this rate, I was in the profit of 9,000 rupees, but I didn't book the profit. So I thought the stock will continue to move until the key resistance of there is a runaway gap at the rate of 756. But again the stock has retraced to the lower level of 690 rupees. So which is somewhere near my entry rate itself. But I have booked my profit at the rate of 700 rupees. So I will show my profit how much it was. Then I will explain what is the advantage over entering in the future versus options. So still the stock is consolidating and also given a little bit upside move, and if I holded this trade I would have made a little bit more profit, but it's not a problem. I exited it at exactly on 14th May because I see other opportunities in other trades. So in this particular trade I made a profit of around 7,600 rupees. So this is a Tata Chemical trade which I am showing in my Zerodha console. So I sold this put option at around 18 rupees and again I bought it at 10.4 rupees. So I made 7,600 rupees profit within 3 days. So you may be wondering on, although the stock has moved as expected and it has been retraced below my entry price, I have managed to book my profit of around 7,600 rupees. So this is what the advantage in options. So even the stock is not moving as expected, you will be collecting the theta decay on every day. But if the same trade, if you entered through futures, the scenario will be different. So the stock has been retraced up to 690 rupees. So which is below my entry level. So I would have been in the MTM loss of around 4,000. So I mitigated this by entering into options. I will explain this through the payoff diagram between the futures payoff versus options payoff diagram. So let me show you first the futures payoff diagram. So the Tata Chemicals, if you see the payoff diagram, so it is linear payoff diagrams. Means if you enter the trade, if the stock moves up, you are going to make a profit, and if the stock moves down, you are going to make a loss. So it is very simple. But the probability of profit is it's 50-50. So the stock has to move as expected. So only if the stock moves upside, you are going to make a profit. Otherwise, you are going to make a loss. The major advantage in entering into the futures is if the stock moves as expected, you are going to make max profit, which is unlimited. So there is no limit for the maximum profit. And if you see, max loss is 7,14,000 because theoretically the stock can go down to zero level. But you can mitigate this with a proper stop loss. So let's see the trade which I entered through options. So this is the options payoff diagram. So I sold exactly the 680 rupees put option at the rate of 18. And the max profit is 18,000 and the max loss is 6.62 lakhs, which is a theoretical one. And the break even of the trade is 662 rupees and the probability of profit, if you see, it is 85%. So this is what key to me. So as I explained in my previous videos, the probability of profit is what important for me, and I enter into a trade where the probability of profit is more. So in this trade, let's see what are all the scenarios will happen. The first scenario is the stock can move as expected. So if Tata Chemicals move upside, so I am going to make profit as expected, and the max profit is limited to 18,000. And the second scenario is, assume that if the stock doesn't move and stay at the same place. So in this scenario, what will happen is the premium going to get decay on every day, which is a theta. So if the stock is not making any move, I am going to collect the theta decay of around 1166 rupees on every day. So there is no need to worry even the stock doesn't make many move. So you are going to collect the theta decay on everyday basis. So this is what exactly happened in my Tata Chemical trade. And the next scenario is, what if my directional prediction gone wrong and the stock is making a downward move? I no need to worry even the stock making a downward move until rupees 662, which is my break even. So even if the stock is making any downward move until 662, I no need to worry, and at any time again the stock can rebound and can continue the bullish direction as expected. So only the scenario where I need to worry on, if the stock moves downward and goes beyond my break even, so there is where I need to worry on, and I need to do necessary adjustment to prevent from the loss. So this is why I prefer options instead of futures. So to summarize on, in futures, if the stock makes the directional move as expected, then only you are going to make a profit. If it is not making a directional move and it is just going opposite to your directional expectation, you are going to make a loss. But in options, if the stock makes a directional move as expected, you are going to make a profit. And if it is not even moving and staying at the same place and making some range bound, then also you are going to make a profit by collecting the theta. And if the stock is going down, then also you no need to worry until the break even. So that is why your probability of profit is very high in this kind of trades. So that is why I prefer options over futures. So that's all from my side. So if you have any doubts into this explanations, kindly post your doubts in the comment section. So if you like the video, kindly do like and subscribe to the NJ Trade Zone channel. Thank you.